Hello, I'm Sarah Fennick. Welcome to Bank to Binary's Asset Roundup. This month we're going to take a look at gold and the factors that influence its price during the month of February. Gold started February on a high note as it extended the first monthly climb since August. In the week commencing 3rd of February, much of the focus was on developments in the emerging markets, where US economic growth and the Federal Reserve's move to taper stimulus have caused capital outflows. Early in week 1, gold held gains to extend the first monthly advance since August. As concern that global growth may be faltering sent equity markets lower and boosted demand for haven assets. Midweek, gold stayed on track and held a decline as a rebound in equity markets damped haven demand amid the slower physical purchases during the Lunar New Year holiday. On Thursday, gold retreated once again, falling from $1,274.74, the highest in over a week, as gains in equities and emerging market currencies slowed demand for alternative investments. As the week drew to a close, gold nudged higher, with investors placing bullish bets ahead of Friday's anticipated US jobs report. As we entered the second week of February, gold edged higher, rising to a 2-week high on speculation that the Federal Reserve would slow the pace of its stimulus tapering after a weak US jobs report raised questions over the state of economic recovery. Gold extended its gains in trading following Janet Yellen's testimony on Tuesday. The metal hit a 3-month high of $1,293.44 on Tuesday before closing up 1.3%. Midweek, gold was still trading near its highest in 3 months, topping $1,300 an ounce, marking the highest close in more than 3 months, as a larger than expected fall in January US retail sales and the rise in weekly jobless claims earlier in the week helped fuel weakness in the dollar and lured investors to the perceived safety of the precious metal. Gold ended the week on a high note, holding above $1,300. As we move into the third week of February, prices hit a 3.5-month high on Monday as fears over US economic growth, following a series of disappointing data, sent the dollar to a 6-week low and lifted demand for gold. Prices rose by 0.9% to $1,330.03 an ounce, the highest since October 31st, and traded at $1,326.25. Midweek, gold slipped and came off 3.5-month highs as investors reaped profits and physical buying subsided. Worries about global economic growth still continue to underpin gold's safe haven appeal, and technical charts indicated that the metal was set to rise. Gold slipped later in the week as the dollar firmed after minutes from the US Federal Reserve policy meeting indicated support for continued tapering of its stimulus. Gold reached $1,314.50 before slipping to $1,309.85, down $1.40. Gold edged down again on Friday, pressured by a firmer dollar, but was still on track for its third week of gains as investors eyed a patchy recovery in the global economy. Moving into the final week of February, gold headed towards its 4th week of gains as concern of prolonged political unrest in Ukraine continued to raise fears of a sovereign default and fuel demand for safe haven assets. Adding to gold's appeal this week were fears that US data releases would miss expectations as the recent extreme winter weather continues to stall economic activity. Further evidence of a deepening contraction in China's economy, which dropped to a 7-month low the previous week, looked set to provide another boost. Gold prices eased on Monday but still managed to stick close to 3-month highs, thanks to a bumpy patch of economic data that has kept traders coming back to the precious metal in recent weeks. Midweek, gold held steady around $1,340 an ounce, close to a 4-month high, hit a day earlier, ending Wednesday with a loss to close back below $1,330 an ounce. This was following better than expected monthly new home sales figures, which helped lure investors to the stock market and US dollar and away from the precious metal. On Thursday, gold extended a decline from the highest level in 17 weeks as U.S. housing data that beat estimates supported expectations the Federal Reserve will stick to its plan to reduce stimulus. Gold prices climbed to $1,345.46, the highest level since October 30th, and ended the week on a high, as concern that the U.S. recovery may be faltering and unrest in emerging markets continues to boost demand for a store of value. So, in summary, gold has risen more than 9% so far this year as concerns over economic growth continue to boost its safe haven appeal. Although prices are still well below the all-time high of around $1,920 an ounce touched in 2011, market watchers remain divided over the prospects for the precious metal, with some analysts forecasting gold to fall to $1,050 over the next 12 months. The short-term drivers seem supportive for gold, and the technical picture is also looking more optimistic, with people looking to buy on dips, but overall some negativity still remains in the medium term as the US economy is expected to recover and the dollar to rally. 3 possible warning signs have been observed: a crash in China, the arrival of deflation, and a fresh recession in the developed world. Gold has a long track record of warning of trouble ahead in the global economy and has usually been right in the past, so the outlook may be much less secure than the market assumes. Gold ends February heading for a second month of advance, the longest run since August 2013. I'm Sarah Fennick, and this has been Bank to Binary's Asset Roundup on gold for February 2014. Don't forget to contact your account manager about this week's investment opportunities, in particular US non-farm payrolls scheduled for release on Friday the 7th of March. I hope you all have a very successful week on the markets. Until next week, goodbye.